What is up, YouTube? Welcome back to Stocks by the Numbers. And today I wanted to dive into a company that I know was getting a lot of attention back in the day, not only several years ago, but even several months ago. This is something that, it's cheap. It's $4 a share right now. So I know a lot of short-term traders may try to do some swing trades here with this company. But we're looking at the business overall here very quickly. And we're just doing a quick overview, quick recap of some of the fundamentals, some of the technicals, and let's just see how it looks like it's setting up potentially for the next couple of months and even longer for the next several years. Name of the company in question, BlackBerry Limited, ticker symbol BB, listed here on the New York Stock Exchange. Now, this company closed about 15 minutes ago here with the market, $4.26 a share, up 9 cents, a little over 2% here on the day. We look at our 52-week range. We have low of 317 a share, a high of 838. Okay, so we're obviously in the bottom 50% of this range, which could mean one of two things. Either A, it's going to rebound and start heading towards the top of the range, or B, it's in sell-off mode and we may potentially hit new 52-week lows. Now, looking at some of the numbers quickly, we have a market cap here. We'll call it $2.5 billion. As we see, the company is losing money per share overall. So they are not profitable right now with no PE. If we come here and look at the earnings, we can see on the EPS side slightly coming in above analyst estimates. And if we switch over here, just quickly looking at quarterly, you can see the inconsistencies and the pullbacks in a lot of these numbers, right? 180, 185 million. For the quarters, respectively, and then we pull back to sub 170, 164 here, back up to 169. So we have some inconsistency, not only on the revenue side, but of course on the income side as well. So very, very volatile numbers bouncing around. And if we switch over here annually, you can see, 936 million. This is back in 2017, sub 900 million, up to above $1 billion, then back into the 900 million. 2021, 700 million, right? So the business itself has been taking hits overall. Now, a little background for you guys who may not be familiar with BlackBerry. This is a company that basically made the first smartphone, right? If you recall, several years ago, they used to show them like in movies and everything like that, and it was basically the smartphones that you have now, except the keyboard was on the bottom half of the phone. Obviously they had, other little features to them, but basically you had other companies like Apple, Samsung move in new generations of smartphones and kind of just push BlackBerry out of the market overall. And now BlackBerry has basically moved into cybersecurity and software for vehicles and whatnot. And I have to say, they have been chugging along. Before we look at the financials, even if we pull up like a one-year chart and we scroll back a little bit, we can see, looking at the earnings, coming in about 4 million above estimates. So even though analyst estimates are subpar, we could say, from where the company used to be, they are consistently coming in above these estimates for at least the last several quarters. We're going back, 6 now? This is 7. Right? Okay, so 8 quarters ago was the last time that they missed estimates. And also you can see revenue was healthily over 200 million for the quarter, and since then has pulled back to, 170, 160, you got a couple of 180s here. See, even before that, you had another revenue miss there. So overall, the business is struggling, as we can tell. You never want to see decreases happen, right? And if we just draw out some trend lines here, regardless of how accurate this really is, again, this is going back to May of 2021, right? So this is a long-term chart that we're looking at. And as we see, the company is basically consistently in this downward channel, right? Now, you could say it's kind of angling here, so it could be setting up a very, very long-term descending wedge. The problem is we have no idea when it's going to happen, right? I mean, it can come all the way down here, right? And we're looking at September of this year, and the price of the stock is 2.5. So that's why I'm saying, it has been doing well basically since right before the end of the year, going from about 317 here up to 426, 430 here. So, in the short term, you could have a rise to the top of this range looking like about 4 3/4, and then it will most likely come back and reject and drop down, as we see on the right side. Now we're looking at 290, 289 a share right? So this is why I always talk about pricing and timing, because you may have missed what you feel is the bottom, 3 or 4 weeks ago, and now it's been on a tear. However, it is most likely, in my opinion, going to enter some sort of resistance, whether it's this fib level or a moving average that we can look at, and it will most likely reject and come back down. That's why something like this, in my opinion, I wouldn't have any urgency to buy this at 426, knowing that I can probably buy it at 326, right? Look at the financials very quickly before we switch over to the technicals there on stock charts. But even if we come down here, right, we have no PE because there is no EPS. The price to sales ratio right now is 4. The price to book is 1.78, right? Now, these look like very, very low ratios. But again, you're dealing with a struggling business with inconsistent business overall, and more importantly, inconsistent revenue and earnings being reported, right? So that's why with a company like this, these could be considered value traps. If we look at a company that is kicking ass and taking names on the revenue and income side, and we have low ratios like this, then we view it as a buying opportunity, right? So that's the difference. That's why you have to look at the numbers and the overall health of the business, because I'm sure some people out there might be looking at BlackBerry talking about potential technical patterns setting up in the short term that could drive the stock from 426 up to 526. And if you time it correctly and everything works out in your favor, yes, you may have the potential to make a quick 20-25%. However, based on what we're looking at, like I said, if this goes from 436 down to 326 over the course of the next 3, 4, 5 trading sessions, it is 100% justified, right? Because again, quickly just to come back, we have a market cap again, $2.5 billion. And if we come down here, the company did $700 million in revenue last year, right? So they're trading like 3.5 times total revenue. So that can easily come down to like 2 times revenue, especially with how this company's been performing. So, 700 million, 2 times revenue is 1.4 billion, not 2.4 billion, right? So this stock can easily take a 30 to 40% haircut, in my opinion. And, oh wait, I wanted to look at the financials. My apologies. We come back here to the financials again, and I wanted to go down to the profitability ratios, of course, because these are the numbers that really tell us the health of the money that the company is making, right? If we look at the return on assets and basically all of these profitability ratios, we can see serious inconsistencies and a lot of volatility over the years, going from minus 36% to plus double digits here of almost 11%. And then just swinging all around, positive, negative, minus 33%, climbing out. This was 2020, though, obviously, so these numbers are going to be, the worst. But coming back, climbing out of the hole, going slightly positive. Now return on assets sitting at almost minus 4%. Return on equity, same thing. Huge swings here. Huge swings, going from minus 58%, plus 16%, minus 55% there, pandemic, back up to 0.7% positive, now sitting minus 6.7%. Return on invested capital was slightly positive, now minus 5.25%. The gross margin percentage has made a slight increase, indicating that, see, this is why I like TradingView, because you can just click on, see, it says show description. You can click on that, and it tells you what the gross margin is, right? Gross margin, metric analysts use to assess a company's financial health. Okay, and it says down here, what does it mean? A hesitant gross margin sometimes indicates incompetent management. However, a strong change in gross margin may indicate that the company has changed its business strategy or business processes, right? So that's why the gross margin percentage, right, took a massive hit. Oh, well, actually, it was consistently decreasing. This is 2020. Yeah, this is 2020. And as you see, the following year coming out of the pandemic, when everything else made a rebound, the gross margin percentage took another hit down to 42%. Obviously, has since rebounded, now sitting slightly over 49%. So I will say the gross margin is heading slightly back in the right direction. And if they can get it back into the 50s or even potentially 60s, then we can potentially talk about, some real value here down the road. Operating margin percentage has basically been consistently negative, going from minus 29.8% last year, now over minus 34% sitting here currently. The EBITDA, again, one of the favorite metrics of a lot of investors and traders out there. This is the earnings before interest, taxes, depreciation, amortization. And as we can see, just decreasing. You're having little random bounces here over the years, but just basically pulling back overall, dropping to minus 5.2% last year, now sitting minus 17.75%. And of course, the net margin percentage we looked before the company is negative right now. However, coming off, a massive, horrendous year in 2020, to rebound and go positive the following year is definitely nothing to sneeze at. However, unable to maintain that level is definitely cause for concern, going from plus 1.6% now, sitting at minus 2.3%, right? So as we see, overall, the company is struggling. And if we switch over here to stock charts, we can look on the daily. Again, it has been on a rise basically since that low. This was the end of December. Let's just get a date. Yeah, this is, December 28th, December 29th, company low, 317, right? So it basically hit this new 52-week low and then bounced off this low, going from 317 up to 426, as high as 435 here just a couple of days ago. Now, the one thing we could see on the bullish side here is a couple of things. First of all, we have an RSI here at 62. So even though, it has been running for the last several weeks, there's a little bit more room to go. The moving average on the 50-day is 423. As you see, the stock closed at 426. Closing above a moving average is technically viewed as a bullish indicator. However, it has been on a tear, so it can easily reject that and open red tomorrow. However, top Bollinger Band 433, so in my opinion, it's probably going to go up a little bit more before it does come back down. The MACD does still look like it's trending upward, so it's heading in that upward direction right now in the short term. We switch over here to the weekly, and you can see the RSI here only 44, so definitely has the potential to run up even to this 50-day moving average of 548. Now, percentage-wise, it seems like a big move, and in the short term, if you want, you could try to take advantage of that situation. However, in my opinion, even if it does happen to run up into the fives, it will most likely immediately pull back and sell off. But you can see, more importantly, if you look, see like here, the way it bounced around the mid-Bollinger Band. Here, it rejected where the 200-day and mid-Bollinger Band met up. There's a rejection. There is some fighting, slightly gets above, and then immediately pulls back. Continues to fight around the mid-Bollinger Band, right? Bounces off the bottom, rejects off the mid-Bollinger Band, bounces off the bottom, right at the mid-Bollinger Band. So here, the mid-Bollinger Band is showing 441 on the weekly side. So that may be your top 441. However, it does look like the MACD is kind of curling right there. So that's why we could have the potential to have a little breakout here and just bust up into the fives. But, again, in my opinion, I really don't see it happening. And even if it does happen, it will most likely be short-lived. If we switch over here to the pivot points on the weekly, you can see 531 right here, 531, which is close to a moving average. However, if we switch back here to the daily, look at that, 200-day moving average of 531. So obviously, it has to do a couple of things to maintain its bullish momentum. However, this right here, this level, in my opinion, is going to be your major resistance of 531. Now, again, the company closed right near this 50-day moving average, so we have to see how it plays out in the next day or two. And if it continues this bullish trend, it will most likely come up to resistance 1 of 464 before it has the potential to break out and go even higher. But overall, in my opinion, BlackBerry seems to be struggling, and even if you wanted something in the software or cybersecurity space, I feel that we can probably either find a better, healthier company, or let's just be patient and not pay $426 when we can get it for potentially $326 or even lower, with a potential for a new 52-week low. But I'm going to end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, please drop it down in the comments section. I'm usually very quick to reply. Just like everyone on YouTube says, if you like the video, give it a thumbs up. Helps out the algorithm. If you like the content, please push the subscribe button. It means a lot to me. I love all of you. And overall, like I always say, moving forward, I understand that markets are rocky, and they're volatile, and they're uncertain. So I want to wish everyone success. I hope everyone makes a couple of dollars. Thanks for stopping by, guys, and I'll see you in the next video.